Good morning, everyone. Actually, hello and welcome, everyone. You might be in different time zones. Many thanks for joining and plugging in today. Special acknowledgement to the Indian cricket fans who, despite the semi-final, the webinar that we are having today is part of the collaborative project on low carbon development in China and India, which is supported by Shakti Sustainable Energy Foundation and the United Nations Development Program UNDP. We'd especially like to thank UNDP China for hosting the resource persons in China and for providing logistical support at Beijing. I have the pleasure to introduce our presenter today, who is Dr. Wang Yao. Dr. Wang Yao is a professor at the Central University for Finance and Economics and is director at the Research Center for Climate and Energy Finance. Hello, Wang Yao.
Hi, hello.
Hi. And it's a pleasure to moderate the session also because we've worked together with Central University for Finance and Economics, Dr. Wang Yao. Well, it's a pleasure. And Dr. Wang Yao is scholar and her work speaks for the same. She has written two books. In fact, like two of her books, I'm just going to cite. It's on carbon finance, global vision and distribution, as well as on climate finance. She is also affiliated with the University of Southern Queensland, Australia, as an adjunct professor. And she was, in past, she was a visiting fellow at Harvard University and a visiting scholar of the Harvard China Project and Harvard Environmental Economics Program. She was also senior manager in investment banking and has considerable underwriting experiences. So, here all, the good thing is that we have a speaker who is well versed with environmental economics, with public finance instruments, but also on traditional finance as her experience speaks. But before I hand over the mic to Wang Yao, I'd also like to sort of just flag in some key developments on the India policy front, which is, just yesterday, the Exim Bank of India launched the first set of dollar-denominated green bonds, and they had hoped to raise US $25 million, and it went up to 500 million. And so, in future, we can see like India as market-oriented as it is, one would expect to see a lot of market-based instruments in India. The second development, which is more related to the public finance, that I'd like to flag, and this is also a recent development, was in our union budget this year, our finance minister, he announced to, as an indirect tax measure, to take the coal cess, double the coal cess, and this is the second time the current government is doing so, in less than a year, to 200 rupees. And this is expected to contribute an additional 12,000 crore to the National Clean Energy Fund, which is supposed to be a government fund to enable innovation, both in terms of research, development, as well as practice in clean energy. So, and we are very keen to kind of learn from China because in past, generally, like India has gone more for market-based measures, and China has a balance of both market as well as support from government and planning and building institutions at different levels. So it be very, very, it's a very relevant topic, and we're looking forward to hearing from you. Wang Yao, over to you.
Okay, thank you so much, Sally. Thank you for the introduction. And many thanks for TERI and the UNDP's invitation. I'm very glad to give presentation here. And I hope we can have a full discussion on financing or low carbon development. And first of all, I would spend a few minutes to introduce my center. It's a research center for climate and energy finance at Central University of Finance and Economics. We call CUFI. And CUFI actually is one of the top university of focus on financing and economics. The university was belonged to the Ministry of Finance, and after the China's university reform, now we belong to Ministry of Education, and we have very close relationship with the Ministry of Finance and other financial institutions. And for the center, actually, it's an interdisciplinary academic research center at CUFI. This center's main research fields include climate finance, environmental economics, and green finance and energy finance. From 2011, after this center set up, we release climate finance report every year. And last year, we released the China's carbon finance report at Lima's climate conference. And this coming 12th April, we will release the 2014 China's Climate Finance Report, and we will translate it into English and share with all of you. Okay, as to low carbon financing, I would as to low carbon financing, I would come up with 4 parts. First is the financing scheme to boost low carbon development, and then I will focus on financial instruments to discuss the public finance and carbon finance and green credits in China. Okay. And the finance scheme to boost low carbon development, I think measures to reduce greenhouse gas emission and adapt to climate change will place more pressure on the budget of government and bring about extra financial demands. Obviously, to develop low carbon economy has brought new challenges to the management and use of the fiscal revenue of the government and the attraction of extra funds. This challenges actually is how to identify financing needs in low carbon sectors and break the financing bottlenecks, and how to determine the structure of financing mechanisms, how to give full play to the roles of public and private sectors, and how to provide what specific policies for low carbon financing. So we will discuss this about. I think to improve the financing capacity of the government in low carbon economic development, efforts can be made in the following 3 aspects. Actually, there are 3 effects. The first effect is expand the size of disposable funds through scale effect. This is the scale effect. That means we have more funds to invest in low carbon area. And the second effect is the efficiency effect. That means we use less money to realize the same low carbon development objectives. And the third is the substitution or structure effect. That is to leverage more private capital. Yeah. So this table is a summary of financing effects. For the scale effect, to directly provide extra finance source, we can, such as the improvement of existing policies concerning taxation, fees, and financing means and policy innovation. And for the efficiency effect, to improve the efficiency of the use of existing funds and management mode, such as we can strengthen the management of existing special funds for low carbon economy, and all the reform the transfer payment mode. And for the substitution effect, so we will leverage more private sector to invest in relevant low carbon economy sectors, so we can save some government expenditure which can be used in other low carbon economy sectors. So we can use low bonds and other enterprises or some private capital to invest in this area. And for a sound financing scheme will effectively boost the growth of low carbon economy. There are actually three categories of financing. Of financing instruments. It's a fiscal instruments and financial instruments and international financing instruments. Later, I will focus on financial instruments, but now I will give the scheme to explain the fiscal instruments and international instruments. For the fiscal instruments, there are taxation, fees, and transfer payments. For the taxation, I think one of our research found that for many countries, local governments, actually they have the most of the responsibility on environmental protection and low carbon issues according to the budget. So we should green or reform taxes to increase the source of funds for local governments to develop low carbon economy. First of all, for taxes whose revenue is shared by local and central governments, we can adjust the tax rate of taxes on land use or transaction. Second, for local taxes whose revenue is owned by local government, we can adjust the tax rate of taxes, such as the emission-based vehicle and vessel taxes to increase the extra tax revenue. And we can also impose new taxes, such as the environmental tax and the carbon tax. China actually talk about the environmental protection tax for several years. And as I know, this year we just finished the two big conference, and unfortunately, environmental protection tax are not fully discussed in this conference. But I think for the Ministry of Finance and for the Ministry of Taxation, they are thinking about to issue the environmental protection tax. And also we are discussing if the carbon tax should be independent tax or be included in the environmental protection tax now in China. And it's all in the discussion, but not have the decision. But in the future, I'm sure we will have the environmental protection tax. And for the fees, fees are fiscal instruments that are easy to implement in the short term, reforming existing fees, such as increasing the pollutant discharge fee and the road toll, and charging new fees can become a major source of local carbon financing for governments. Internationally, fees to support the local carbon development of cities are concentrated in the housing and the transport sectors. And the third instrument of the fiscal instrument is transfer payment. Transfer payment can be deemed as a major source of for the local governments of low carbon financing. The transfer payment with special fund for special purpose will also help maximize the dividend of tax revenue transfer payment. We can realize the transfer payment of some fiscal revenue to relevant departments for low carbon development by setting up a special local low carbon financing fund or establishing special low carbon financing programs for local governments in the existing funds, such as our CDN fund. And later I will also discuss this. And for the financial instruments, because I will pay in the following three parts, I will introduce the financial instruments. So I will pass forward to the international source. For the international source, I think for our government to reinforcing the attraction of international funds is a priority area for government to finance low carbon economy. How to attract more international funds and how to improve the usage efficiency of limited funds are key questions for low carbon development financing. International sources of financing to develop low carbon economy are multilateral and bilateral organizations. We all know the World Bank, ADB, and SD, KfW, and so on. And concessional loans and grants constitute the major financial source of the aid from international bilateral and multilateral organizations to develop low-carbon economy in China. And also, we are looking forward to the Green Finance Fund and maybe other international sources we can use now in China. For the central and local governments, they can how to attract more international funds and to improve this efficiency. I think for the government, we need to improve the ability of the institution who get the money. I mean, such as the Development Bank, National Development Bank, and CDM Fund, and some local governments. They also could set up this kind of institutions to receive the international fund sources and to fund good projects and programs. So for the international, so we can use more international funds. Okay, this is the summary of all the financing instruments, fiscal instrument, financial instrument, and international instruments. And we analysis on financing effect and the feasibility of financial instruments. So for the tax revenue, fees, and transfer payments, and all the financial instruments, they all have the scale effect. And for the transfer payments, it has the efficiency effect. And for the public funds, for the other financial instruments, they all have the substitution effect. And for the international source, it's the risk management instrument. It has the efficient effect and also the structure effect. Okay, I will talk about the public financing. Public financing includes the policy fund, governmental guide fund, and others. And so, for the crucial leading role of public finance, we need to pay attention to this. And the policy fund. Sorry, this is the all the guidance of the public finance models. Have the policy funds, physically supported guarantee funds, green guide funds of the local governments, and the local government financing platforms, and also public-private partnership as a financing model. And for the policy funds, the cooperation between the national policy funds, in China we have the CDM fund, and the local governments can effectively promote the local carbon projects and reduce the risk of the projects. For example, CDM fund. CDM fund was set up in 2006 to support undertaking addressing the climate change. As the major funds is from the national revenue of the CDM project and also other fiscal profits and donations, and it has 12 billion, almost 12 billion. And they invest in some low carbon areas projects, and also they invest in Shanghai Environmental and Exchange, and now they are seeking some more projects on low carbon area, and also maybe there's a new thing happening in China. Now CDM Fund is also China's PPP center. So that means the CDM Fund now is because it belongs to the Ministry of Finance. So all the CDM Fund members now they are members of China's PPP center, and will push China's PPP. This is the financing model. And for the government, it can enhance their guidance of the low carbon investments by the venture capital investment plan of the emerging industries. For example, in the emerging industries venture capital investment plans launched under the China's 12th five-year development program, and the central government allocated part of the industry technology research and development fund to set up the venture capital investment fund, together with the local government fund and the private capital, and or to participate in the existing venture capital investment fund by way of contributing to their registered capital. I mean, they are all shareholders to set up a venture capital investment fund. And for the fiscal support guarantee funds, actually, these days I discussed with some experts, such as the PBOC and officials from PBOC. We discussed just now. Shelley said India issued the green bond. Actually, we are now working on that, on how to issue China's green bonds, and we thought for the incentives, maybe the fiscal support guarantee funds is a very important incentive to support the green bond issue. So providing guarantee for projects with fiscal support can effectively lower the risks and raise the expected rate of return of projects. As shown in table, there has already been the practice of providing guarantee with the public fund, although it has seldom touched upon the low carbon growth area. But we propose that the local governments adopt similar guarantee mechanisms to provide guaranteed service for the low carbon economic sectors in their investment activities. And for the Green Guide Fund of the local government, so far there has already been the practice of the governments jointly establishing funds with the development financial institutions and investment companies to promote infrastructure construction for the low carbon cities and development of the low carbon industries. At the same time, there are an increasing number of cases in which the private capital takes the initiative to launch low carbon related private equity funds, such as in Zhejiang there has a Zhejiang Nuohai Low Carbon Fund. So in this trend, the local governments can refer to the model of the governmental venture capital investment guide fund to establish special green guide funds. That is a fund of, so it established a fund of funds, so that kind of a special green guide fund. And before, I think it's before 2014, China's local government financing platforms do a lot of things, and we expected a lot on the platform. The platform could facilitate the local governments in their effort to develop new financial instruments and also issue some low carbon bonds, establish local low carbon centers. But now in China, because of the local governments, that questions these problems, and now China turned to the PPP. So for the platforms, maybe they will not so important now, and some were dismissed about the local government financing platforms. So for the PPP as a very important source of funds for the development of the new carbon economy. And I think as an important supplement to the public finance, the private finance is an important source of funds for the local governments to develop the low carbon economy. It requires more and more capital to finance not only through the public sector, because public finance can't support the sustainable growth of low carbon economy. So, and also excessive government support may lower efficiency. So how the private sector or how to leverage private sector can participate more in the design and earlier analysis of the projects. People thought PPP would be a very good model to leverage the private sector, and because it can utilize the capital in the long run. And now in China, we call China 2040 is China's PPP year, and not only Ministry of Finance but also the NDRC and other government departments, they are all issued some policies on PPP, and sometimes they are different, but there's a trend is that the PPP will play high role in the future. So we will also pay more attention on that to do some research on this, and also, for my colleagues who is researching on PPP, they are quite busy because many cities and each province they will invite them to give courses to what is PPP and how to develop the PPP. And for some financial institutions, they are found some PPP projects, and so that is sometimes I think it's really very crazy to develop now in China to develop PPP projects in China. Okay, now I will discuss about
Wang Yao, can I just put in a poll question here? We have a poll question for the participants who have joined us, and the poll question is flashing on your screen right now. And the poll question is: are municipal governments, local governments, are they an important force in low carbon investment? And the options are yes, no, maybe. So we request our participants to start the polling, and you will have around 15 seconds left. Okay, so your polling time is end, and now the results will be flashed soon. And we are waiting for the results. And so the results, largely like out of the people, 20. So we have 28 people who have polled, and 22, maximum of them, they say that yes, the municipal governments will be an important role, and only 2 of the 28 people have said no, and 4 have maybe. So, Wang Yao, back to your slides.
Okay. Now we will discuss the China's carbon finance. I think maybe people will have interest in China's pilot carbon market. Since last June, since 2013 June, China has launched 7 regional pilot carbon markets in a bid to gain some experience before the national scheme begins. This also marks China's creation of a carbon market with an emission cap to achieve its goal of reducing emissions by 17% in the next years in the 12th 5-year plan, and 40 to 45% by 2020. So the pilot ETF aims to cover 700 million tons of CO2 emissions, which make China the second largest carbon trading market in the world. Now, after 1.5 years operation, all pilots basically run smoothly, but still have the problem. So we will. I would like to talk about what the problems of pilot carbon markets and what the lessons are for the future's national carbon markets and the perspective of the national carbon market. ETS actually is a very complex system. In foreign countries, the establishment of a carbon market would take a long time, but China's pilot deployed in 2011 and preparing in 2012. and launched in 2013. So each year is a big step. Most of the pilots started in haste. And despite having built carbon trading infrastructure that includes greenhouse gas inventories and monitoring and verification standards and others, but there could still be problems found as well. And the problem is the lack of historical emission data. Before the pilot ETS started, there was no greenhouse gas carbon accounting system at enterprise level. Pilots get part of the data through fragmentary historical emissions data, but this data quality is relatively poor. So coupled with third-party verification companies and the unified methodology, this may lead to setting a high cap or unreasonable benchmark. So second is the low transparency. And in emission data, cap setting, allowance allocation, and transaction data, this may lead to low market efficiency and improving transaction cost. And also, the third is limited legal binding force. For ETS, Shenzhen, Beijing, and Chongqing passed the local legislation. Other pilots are based on government regulations. Tianjin only has a department document with low legal penalty. For the Tianjin, if the enterprise fail in compliance, only asking its correction with a limited time and couldn't enjoy preferential policies in 3 years. So the penalty is very low. And other problems include that some pilot policy always change, such as Guangdong's policy change a lot, and the market supervision system is not perfect. And for the allowance allocation, it's always the ETS first major challenge. The allowance represents the emission rights of control entities in the compliance year. So how to allocate it determines the entity's reduction and the compliance cost. In addition to Chongqing taking the allocation method of independent declaration, other 6 pilots, they adopt the main allowance allocation methods, grandfathering and benchmarking, and they get the allowance by free or auction. And because of the because of the lack of historic data, grandfathering is the most widely used. It is simple and acceptable, but the key concern is that a simplistic approach could result in unfair allocation in which companies with historically high emission levels get higher allowance, while energy efficient peers receive less than they deserve. We will do some interviews with some Guangdong's entities, and we really found these problems. And some enterprises they have done a lot of things on to reduce emissions, but finally they get less allowance. And the benchmarking is confined to Shenzhen pilots and the power sector in other pilots. The biggest advantage of benchmarking is fairness. It encourages enterprises to make energy efficiency and emission reduction actions. And the disadvantage is it is difficult and easy to be affected by subjective factors. So at present, benchmarking is most widely applied in the power sector, but different pilots may take different methodologies and cause different incentive effects. And I think the another much discussed problem is liquidity. Although there is a clear carbon price range from 20 to 90 RMB, but in my opinion, the lack of liquidity is an inherent problem for pilot carbon markets. And the future is also not so optimistic. First, there's still no future market, and the future is also not so optimistic. This is a graph. We can show the EUA future is most traded in the EU ETS, and then is the CER future. And for the spot, actually it's very small. But China will the government of CBRC they are researching on how to set up a carbon future market. But we don't know. Maybe after the national carbon market setting up, we will have a future market. So, but now we haven't, and so for only the 7 pilots, it's very small. So that's one of the reasons that why we have a very low liquidity in the market. And the second reason is that each fragmental market is very tiny, and now our government may thinking about to set up more pilots, and maybe based on these 7 pilots, we will set up more pilots, and all the pilots actually are very small, and so and for the unstable policies, we'll also for the entities and other investors, they haven't the willingness to trade in the market, and because they are characteristics of risk aversion. My team once did a survey in Guangdong, had interviews with 14 enterprises to know their willingness to trade. There are 4 reasons for not actively participate in the transaction. First, they're afraid their allowance was not enough. This is and the second, the turnover was small, but the process to gain the permission to transact was quite complicated in some state-owned enterprises. We know state-owned enterprises most of the entities are state-owned, and they have very complex procedure if they want to want to do some trade in the market. And third is policy instability made enterprises wait and see. And the fourth is that most of enterprises have no awareness of carbon asset management and their lack of professionals. So that it is also the fourth problems of the market. Entities have gradually realized the urgency of emission reduction, but carbon asset management awareness is still weak. I think now for the 4 pilot exchange, they gave some, they organized some courses on carbon asset management, and now more and more entities have the awareness. For example, my university, Kufi, is also one of the entities controlled by Beijing's carbon market, and the people responsible for this is one of my teachers, and I have an interview with him, and actually I'm very glad to know that from our president of our university pay high attention to reducing emissions now, because last year our Kufi's allowance is not enough, and we pay some money. I don't know exactly the money, but we actually paid for not enough for our allowance not so enough. And so for the lessons for national carbon market, according to the NDRC's plan, a national-wide China ETS would test run in 2016. But now I know this may be changed. Maybe we'll postpone in 2018 to 2019. But at present, we are at the top design stage, learning from pilots. We have some suggestions for the national carbon market. First, we need to promote a top-down and bottom-up dual path. The construction of national carbon market doesn't mean the entire end of the pilots. From top-down side, the central government, NDRC, built ETS infrastructure that includes cap setting, allowance allocation, MRV standards, trading mechanisms, and regulatory framework. From the bottom up, side, allowing pilots have greater authority, such as the link with other areas and the link with national markets gradually, allocation of the allowance, flexible using the auction income. The 2 points I think should be noticed is one is the allocation of the rights between central government and the local government, and we suggest unify allocation rules, but local governments have the right to allocate. Another is the transformation of pilot change. If we set up a national carbon market, maybe only 1 or 2 exchange will exist, and so others could transfer to carbon finance institutions. And the second suggestion is we should to improve system design and related impact assessment. For example, the government should organize a top design working group composed of related officials from NDRC, MOF, MET, CSRC, and also local DRC officials, and the representatives of pilots, scholars, and other stakeholders to design the system together and to improve the legal binding force and improve capacity building. And third is to adopt a flexible allowance allocation, combined use of the grandfathering, benchmarking, and all in the different stage. Maybe we can entities can get the allowance by free or auction. And we need to boost the liquidity of second market. First, we can developing more trading products such as forward contracts, swaps, futures, options, and making convenient trading rules along the exchange using concentrated trading and continued listing trading. And third, we can introduce market maker to boost the liquidity of the secondary market. And fifth, we can develop carbon finance, including developing carbon finance institutions and encourage carbon finance innovations using some incentive policies such as tax-free and discount. And for the time being, I will not give the details about the basic parts of the construction of carbon market. This is the NDRC announced in last July, but now I know there's something changed. Maybe especially this roadmap, we will not set up the national carbon market in 2016. Maybe 2018 or to 2019 we will set up the national carbon market. Okay, now we will talk about the carbon finance innovation. So first, we need to know what does carbon finance innovation contain and what are the key conditions. And I will highlight on carbon bond in China. So what's the key conditions for issuing a carbon bond in China? This here is the overview of carbon financial innovation. The black fonts show the product that is existing or once existed, such as carbon bonds, carbon asset-backed loans, factoring, and mortgage guarantee. And China's industry bank just lent 40 million yuan to a chemical company using carbon permits as collateral. And the blue font means the products are coming or having the similar products. I'm sorry, I spent a lot of time on. And I will talk about the carbon bond. Carbon bonds refers to the debt obligation that is issued to investors by governments or enterprises and raise money for low carbon projects and promise to pay a certain period of interest and repayment of principal at maturity. In China, the first carbon bond in China issued by China General Nuclear Power Group, and it's 1 billion yuan in 5 years, and it's underwritten by Shanghai Pudong Development Bank and China's Development Bank. And it is a combination of a fixed rate, and the fixed rate is 1.65 percent, and the floating price of carbon offsets from CGN's 5 wind power generation projects. This bond will be traded among banks or securities companies. And I will say it is a very complete, it's a complicated market in China's bond markets, because China have two bond markets and 3 regulators. For the corporation bond, we have it was regulated by CSRC, and the enterprise bond it was regulated by NDRC, and also debt financing instrument of non-financial enterprises in the interbank bond market. It was NAFME is one of the institution of the PBOC. So this table is the exchange bond market, and we have two markets: exchange bond market and interbank bond market. Interbank bond market is the biggest one. It's almost 97% transaction is happened in interbank bond market. The regulator is also different, and the transaction objects is also different. And here we have in the exchange bond market, the product is government bond, corporate bond, and enterprise, and very small enterprise bond. And the internet bank bond market, they have a government bond, central bank bond, financial bond, and most of the enterprise bond, and also debt finance instrument of non-financial enterprise. And the first carbon bond in China is debt finance instrument. Actually, it's a medium-term note. So I think the base assets for the key conditions to issue a bond, a carbon bond or green bond in China, it should be based on cash flow of projects, but not based on the credit of the issued body. If it's based on the credit of issued body, the money should used in carbon-related projects. But in this case, it is based on the credit of the issue bond. For the company actually is a 3A company. So it's in this case. And the uses of bonds are carbon related. In a general way, it should be related to carbon reduction directly. But at the primary stage, maybe it could focus on the fund's indirect effect on carbon reduction. And in this case, the money will be repay the bank loan. So it's actually not a real, in my opinion, it's not a real carbon bond, because it is not used in the carbon-related project. And also we should balance of financing cost and investing income. I'm sorry, maybe I have no time. Yeah. If you have any question on green finance or green credit, you could ask me questions. Okay, Shelly. Okay, I will very quickly go to the green credit in China. I think since 2007, China's Banking Regulatory Commission (CBRC) has issued a series of green credit policies. The most important one is guidance to green credit in 2020. And the 2013 is the instruction on green credit work, which made rules for the credit extension for energy saving and emission reducing, and the policy boundaries, managing styles, institution management, capacity building, procedure management, internal control, information disclosure, and regulatory policy of green credit, and also to give the definition on what is green credit, and keep supporting industries of green credit, but also cautions laws to energy intensive, highly polluted, and capacity exceeded enterprises. That means these policies will constrain banks to loan to this we call three high enterprises. the establishment and improvement and to establish the environmental and social risk assessment system and the MRV of green credit. And comparing with self-regulation, with self-regulation based on market in the developed countries. China's financial regulatory agency carry out more powerful supervision on markets, which supplements market regulation. China's banks actually they are the key intermediary agents of China's financing markets, and China's supervision departments are very strict. They are strict and powerful. That's one reason is because China's most banks is state-owned bank, and all the banker of these state-owned banks, they are assigned by the government, so they are willing to obey all the Chinese regulators their rules. So that is why our environmental protection law actually, before the new law issued, our environmental protection laws, there's power. Their power is very weak, but China's financial regulators, they have strong power. So that's why we have three green finance policies, and the green credit policies actually they are very good job to guiding the banks funds to low carbon area. And I think this is the China's green credit. Now we have what's context among in the green credit policy. We have the statistical system of the green credit. People, if you are interested in, you can find this system in CBRC's website. There are 12 types of green credit. Actually, it's 11 because the 12th one is the others. There are 11 types of the green credit, and CBRC gives very specific methodology for the MRV how to judge one project is actually a green credit project. And also CBRC set up an environmental information sharing mechanisms with MET, but now it's not works so well, but they are working on that. And also they're promoting the establishment of incentive mechanisms. I think this is the most important because we in the January and February, my team to do some interviews with CBRC and the Beijing CBRC and also some officials and also financial institutions. We need to know for the financial institutions if they want to give a green credit, they need they should have the motivation. That is, they have profits or the risks could control. So how to promote the establishment of incentive mechanisms is very important, such as for the subsidy and also guarantees such as this. And CBRC now are working with the Ministry of Finance, hope to promote some incentives. And also they constantly improved assessment system of the green credit. And yesterday I got a news from the officials from PBOC, and they said now they may working together with CBRC to definite the green credit and also green projects. What is green project? And because they are focusing on green bond, and because CBRC now they have a green credit policy, and they definite the green project. So for the PBOC, if they accept this CBRC's statistic system or well better than, so now they are working together to think about this. And for the effects of green credit, it could be internalization of non-corporate environmental costs by credit transmission mechanisms, and making use of financial mechanisms to implement economic constraints on industry with poor production capacity and high pollution, and also credit guidance in driving enterprise to grasp opportunities of low carbon development. And of course, for the green credit policy, it still has broad room for development, because now our green credit policy actually is voluntary, it's not a mandatory policy, and we should accurate positioning of the role of regulatory body and market participants, and also further enhancing the operability of green credit policy, and enhancing the binding role of regulations, and developing the incentives of the green credit, and enhancing capacity building of banks, and improve the internal incentives. I mean in banks, they should also improve the internal incentives for the if they pay have more have more green credit loans. Some employee, if they are responsible for this, they could get 奖励 bonus. Yes, right. Okay, thank you so much.